See, anything moves on finance only. Without finance, you cannot do anything. Like when you are talking about any business, the basic infrastructure is finance. So, knowledge of finance is crucial for managers across the board. And finance is much more than accounting and number crunching. That is why the MBA coursework aims to give students a bird's eye view of the money management processes. As a manager or project lead, one should be able to understand what is happening by taking an overall cursory glance over the financial reports, forecasts, and economic trends. So you'll know whether you are doing well or whether some problem is there, what you should do to mitigate that problem or to eliminate that problem. So, the knowledge of finance is a must for anyone who is involved in any type of business. I think even a thela wala who manage everything himself, whether it is finance, whether it is marketing, whether it is HR, it is a one man show, but he has a good knowledge of finance. Sometimes I think because they themselves are involved in it and they have learned practically from the grassroots, they have a better knowledge than person who has learned it from books. So apart from knowing the basic finances, like how statements like uh, profit and loss, balance sheet, cash flow, budgets, cost sheets, etc., are prepared, there are certain things which is specifically associated with supply chain management, like reverse factoring, trade credit, management of accounts receivable, payable, foreign currency risk management, blockchain technology implementation. So these five things are very crucial for any one who is involved in supply chain management, because supply chain management is not related to anything happening only locally. It can be happen locally, it can happen nationally, or it can happen internationally. So for this, the financial aspects also has become uh, complex, and number of parties are involved in it. So what is profit and loss account? I think only Gaurav you are present, na? Hello,
No, no, ma'am.
hello.
I'm also
Uh,
Praveen.
Praveen ji is also there, ma'am.
acha, present. So Gaurav, you read
Okay, ma'am.
what is profit and loss account.
Yeah, profit and loss account, definition and explanation. The account through which annual net profit or loss of a business is ascertained. It is called profit and loss. It is called profit and loss account. Gross profit or loss of a business is ascertained through trading account, and net profit is determined and by deducting all indirect expenses. Business operating enterprise from the
Expenses.
gross, yeah, expenses from the gross profit through profit and uh, uh, through profit account.
Hmm.
And secondly is thus profit and loss account starts with the result provided by trading account. And thirdly, the particulars required for the preparation of profit and loss account are available from the trial balance. And uh, and
Only
fourthly,
indirect.
only indirect expenses and indirect revenues are considered in it. This account starts from the result of the trading account, gross profit and
Or
or
gross loss.
loss. And fifthly is gross profit is shown on the credit side of the profit and loss account, and gross loss is shown on the debit side of of this account. And sixthly, all indirect expenses are transferred on the debit side of this account and all indirect revenues on credit side. If the total of the credit side exceeds the debit side, the result is net profit. And if the total of the debit side exceeds the total of the credit side, the result is net loss.
That's
And
like if you
seventhly,
have. Yes, continue.
as the net profit and or net loss of a certain accounting period is determined through profit and loss account, so it uh, heading is name yeah, even
Name
this is
of
also
business.
included. Yeah, name of business, profit and loss account for the year ended the 31st of 12th month 2021. If accounting period ends on 31st 12 2021.
So you have, it is for a period. Okay, how much profit you have made, how all the transactions, trading, whatever trading is going on, or what are transactions are going on, so how much profit you have made and how much loss you have made. It can be, if generally it has to be balanced, but if it not, you there can be like naturally the focus should be on net profit, because this money is needed to run the business, because it is not a one time process, it is a cyclic process. You don't make profit, then the business will not run further. So this is the basic profit and loss account, is the basic aspect of any business.
And reverse factoring
Reverse
explanation.
factoring, this is especially associated with supply chain management. Yes, continue.
Reverse factoring explanation. Reverse factoring is when a finance company, such as a bank, interposes itself between a company and its supplier, and commits to pay the company's invoices to the supplier at an
Accelerated.
accelerated rate in exchange for a discount. And secondly, this is a lower cost form of financing that accelerates accounts receivable receipts for
For
supplier.
supplier, so
Yeah.
that there is a bank which is in between the supplier and the company, and it pays the supplier for the bank, sorry, for the trader, and this way the process is accelerated. You don't have to wait for they get it, and then naturally they charge some interest for it from the trader. Yes, what is the
and
total process? Yes, continue.
and reverse factoring process. Uh, the buyer and the suppliers will be on board for the reverse factoring process or
Program.
program. In most circumstances, buyer offers reverse factoring only to its most credit-worthy supplier. Following is the stepwise process of reverse factoring. Firstly, the buyer places an order. Secondly, supplier fulfills the order and generates invoice for the buyer. And thirdly, the supplier's invoice is approved by the buyer and confirmation is made regarding the payment to the financial institution at maturity of the invoice. And fourthly, the supplier then has to sell the invoice to the financial institution at a predetermined discount rate. Fifthly, after this, the supplier receives the fund against the invoice immediately. And sixthly, as committed by the buyer, at the maturity of invoice, buyer will pay the invoice amount to the financial institution.
So this way, the financial cash flow is accelerated. The buyer is also is receiving the dues in time. The the supplier is also receiving it dues on time. Buyer is they are going through, and it is much safer also. There is a third party involved.
Ma'am, what is the role of the bank, ma'am, actually? Over here. Over here.
Actually, today when you are paying someone digitally,
Yeah,
you
yeah,
are
yeah.
not paying that person directly. You are paying it through a bank, your bank.
Yeah.
So
Okay.
it is something
Wow.
like that,
Yeah, in that manner, yeah.
that manner.
Okay.
Supplier, logistics provider, supplier send goods and invoice to the buyer, shipper. Then buyer approves invoice and informs platform. Supplier directly asks for payment. Platform informs financial. Financial can be a bank
Yeah.
or any non-banking institution, any financial institutions.
Okay.
Financial pays supplier. The buyer does not directly pay to the supplier. It is through a bank.
Yeah.
Buyer pays on date of invoice, and they all do it through the financial. So supplier also gets the money on time, and buyer also is at ease. Buyer is involving this financial institution to make the payment.
Okay.
So this is the way it works. So what are the benefits for buyers?
Yeah.
Gaurav, you read.
Yeah.
Now Gaurav, you read.
Yeah. Ma'am, benefits for buyer. Firstly, the buyer can have access to longer payment terms with the supplier without even negotiating over any factors such as price. Secondly, there is an increase in trade payable which results in the buyer experiences efficiency in day-to-day business operations.
Hmm.
Thirdly, provides optimized working capital for the buyer. Fourthly, the buyers can avail benefit of cash discount even after paying for the invoice at its maturity date. And fifthly, this helps in raising further resources of finance at better rates. Sixth, this can act as a major benefit to buyers in terms of accelerated cash flow. And seventhly, the companies no longer has to deal with the request from suppliers regarding
Early
early
payment.
payment.
Because already this whole payment is given to the financial or the financial institution, and they are dealing with the suppliers. So the buyer is at ease. The buyer can concentrate more on his other work. Benefit for the suppliers.
Benefits for suppliers: the suppliers get faster access to cash, that too at advantageous rate. Secondly, this results in faster cash conversion cycle from delivery
To cash.
to cash. Thirdly, the overall balance sheet of the suppliers becomes uh, becomes efficient for getting future finance at better rate.
Better rates.
Yeah. Fourthly, the cash strapped supplier is generally paid much sooner than the normal supplier in exchange for the finance company's
Company
fee.
fees. So if they are cash strapped, they get it paid. So it depends what is the situation of the supplier. So the supplier also benefits from this reverse factoring. Just so here both buyers and suppliers, because the financial aspect of payment is taken by the financial institution. Just read this.
Gauravji, I will start.
Okay, okay.
Okay. Who benefit from reverse factoring? Both buyers and supplier can experience a smoother process using reverse factoring as they have to deal with financial institution for payment. This help to further transaction in a strong cooperation amongst the buyer and supplier, which create competitive advantage. All three parties get benefit from reverse factoring arrangement. The bank charge certain interest on reserve factoring and avails ongoing income by providing this service. Retailers can develop good working relationship and can retain good and reliable relationship. Supplier get great working capital.
So here all three, just like when we are paying anyone digitally, it is not like we do it direct. It is through a financial institution. So the process, and it is much safer also, because the bank is there. If some fraud is done, there is someone to look into it. There are so many rules and regulations to regulate the total process. So all these three, the financial institution is also earning from it, because they charge interest, and then the buyer is also benefiting from it, the supplier is also benefiting it. So this is a very good process being used by supply chain management.
Documents for analysis and decision making. Supplier list, previous annual financial statement, last two articles of incorporation and association, documentation which depict full tax compliances.
Compliance. So these documents are necessary for reverse factoring, where you have to, the suppliers list should be there, then previous annual financial statements in the last 2 years. Um, because of these transparency and use of information technology in the financial sector, the chances of cheating someone or making avoiding tax has also reduced. Then you have trade credit.
What is trade credit? Trade credit is a business to business B2B agreement in which a customer can purchase good without paying cash upfront and paying the supplier at a later scheduled
Yeah.
date. As usually business that operate with trade credit will give buyer 30, 60 and 90 days to pay with the transaction record through an invoice. Trade credit can be through of as a type of 0% financing, increasing in company assets while differing payment as a specified value of goods.
So when you don't have to pay it immediately, there has, you are given certain time. It is a predetermined thing. Whatever they agree upon, it can be 30 days, it can be 60 days, like it is. And so you have certain time to make the payment. So it is sort of a zero financing. You are getting finance without paying any interest. See, this is how trade credit works. Supplier, goods supplied at no cost. It goes to the business. Business sells products to the customers. Then for customer, it gets the money. Customer pays for the product. Business pays for invoice. Once it gets the money from the business, it pays to the supplier. So even if that time he is not able to pay for the goods which he has got from the supplier, he has got time and he can use, he will pay only when he gets the money from the customer. Yes.
Understanding trade credit. Trade credit is an advantage for buyer. In some cases, certain buyers may be able to negotiate longer trade credit repayment terms, which provide an even greater advantage. Often, seller will have a specific criteria of qualifying for trade credit. A B2B trade credit can help a business to obtain, manufacture, and sell goods better, even ever having to pay for them. This allow businesses to receive a revenue stream that can retroactively cover cost of goods sold.
Mm.
Walmart is one of the biggest uh, utilizer of trade credit, seeking to pay retroactively for inventories sold in their stores.
Stores. So you
International
can see
business deal.
even very big businesses are using trade credit. They don't pay it immediately. They only pay once they have received the money from the customer. Hmm.
International
International.
business deal also involve trade credit terms. In general, if trade credit is offered to a buyer, it typically always provide an advantage for a company cash flow.
So he has an advantage. He does not have to at that time. So he can wait till his goods are sold. And actually, then you have to do very actively market the and sell the goods, because if you are not able to sell the goods, then you won't be able to, because you are getting the raw material at a credit. But at any way you have to, they are, you are given some time, but then you have to pay for it, and for that you have to see that your goods are sold and you get the return on your good. So it gives you an incentive also to work hard. Yes, continue.
The number of days for which a credit is given were determined by the company allowing the credit and is agreed upon by both the company allowing the credit and the company receiving it. Trade credit can also be an essential way for business to finance short-term growth.
So actually, both have to agree how much credit you want and how much time you want and how much time the other can give it to you. So you have to come to a mutual agreement.
Since trade credit puts supplier at somewhat of a disadvantage, many suppliers use discount when trade credit are involved to encourage early payment. A supplier may give a discount if a customer pay within a certain number of days before the due date. For example, 2% discount if payment is received within a 10 days of issuing a 30 days credit. This discount would be referred to as 2% upon 10 days.
1 minute, one second. This is written like this, like
Okay.
uh,
30 or simply just 210 net 30.
net 30.
Actually,
30 days
जब
is
भी 30 days
uh,
is a payment term, and when the buyer is paid before the uh, decided time period time, the supplier give the discount of
hmm,
2% or 3% as mutual understanding.
at least, so that, because after all the supplier also needs the money. So for that, he gives certain discount if it is done earlier than what has been agreed upon.
Actually, every businessman take the loan from the bank, so
Hmm.
give the discount and take the benefit of in tax.
Hmm.
Sorry, interest.
There can be number of reasons because everybody and to make the business grow, government is but a bank are also offering so many ways of
And also improve the cash flow of supplier.
cash flow of the supplier. Advantage,
Advantage,
continue.
disadvantage of trade credit. The buyers. The advantage of trade credit for buyers include simple and easy access to financing. It is also an affordable type of financial that come at no extra cost when compared to other means of financing, such as a loan from the bank.
Hmm.
Because payment is not due till later, trade credit improve the cash flow at business. They can sell the goods they acquire without having to pay for those goods till a later date. Trade credit also improve your business profit profile as well as your relationship with your vendor.
Vendors.
The disadvantage of trade credit include high costs if payment are not made on time.
Hmm.
Cost usually appear in the term in the form of late payment penalty charges or interest charges on the outstanding debit. If payment are not made, this can also negatively impact the credit profile of your business as well as the relationship with your
The
supplier.
supplier. Actually, somebody has given you on credit, but what happens when you lend someone? You give it in one go, but when you're taking it back, it comes back after requesting them for several times. If that is the case, so naturally the relationship between the supplier and the buyer will be sour. But buyer should also realize that it is a if the relationship it goes, this is an ongoing thing. It is not a one time. Later on, they will only suffer from it. So it is beneficial even for the buyers to pay the suppliers within the credit period.
Really, many types of problem face the when we are not paid the payment at that decided time.
Hmm.
Supply line stoppage, production suffer.
Suffers naturally if they stop the further supplying of the raw material, your production
Yes,
will suffer.
relations also not good
Hmm.
and pay the interest before after the decided period. Sailor. The advantage of trade credit for sailor include with building a strong relationship with your client, encouraging customer loyalty, and therefore repeat business.
Business.
Trade credit can also lead to higher sales volume as buyers are likely to purchase more when there is no cost associated with the financing.
Financing.
Sellers have a few more disadvantages than
Then
buyer
buy.
when it comes to trade credit. These include delay revenue. If a business is flush with cash, that's not a problem. If budget are tight, then
Delayed. Delayed.
delayed revenue might be on issue in term of covering operating cost. Trade credit also come with bad debt as some buyer will
Inevitably. Not
inevitably not to able to pay. This means a business takes on risk when extended financing. Bad debt can be written off but having a customer not pay can always be sorry,
Detrimental
detrimental to
to
our
business.
business.
Yes, sir. So many times people take loan from the bank and there it is written off or it is said that they'll pay it later. So if these things continue, naturally it has led to so many much of problems and that has affected our economy. So it is for the beneficial for both the buyers and the suppliers that whatever agreement has been made, they should stick to it and do the payment on time.
Ma'am, this Flipkart is also doing these things. I like trade credit, ma'am. Like they
I
are
did.
providing
Huh.
in Flipkart also, they are
Huh.
providing some trade credit. Yeah,
Hmm.
like around 50 to 60,000 they are uh, giving you the trade credit. If
Hmm.
you will accept it, their terms and condition,
Hmm.
you can pay later them. You can buy the sets, buy things from that
Hmm.
amount, and you can pay later also.
Because after all, they also have to keep on running their business.
Yeah,
So if they don't have buyers, then later on they'll have problems. So they provide the finance and then they try to get the return from it.
yeah, yeah. They are also applying that strategy.
Hmm.
They are increase the business.
Hmm.
This is business
Hmm.
strategy. Pros and pros means, ma'am.
Advantage and con
Sorry,
is the disadvantage. What is
pros means.
pros and cons?
Sorry,
Pros and cons.
what is the full form? Pros and cons. I not
Pros
understand.
is for, it is in favor,
Okay,
and cons is it is against.
okay. Cost effective means in of financing for buyer.
Hmm.
Cons, high cost of for buyer if payment are not made on time.
Hmm.
Pros, improve cash flow for buyers. Cons, late payment or bad debt can negatively impact a buyer credit profile or relationship with supplier. Encourage higher sales volume for seller.
Hmm.
Seller run the risk of buyer not paying their debt.
Hmm.
Leads to strong relationship and customer loyalty for seller. Delayed payment can be a strain on the balance sheet for seller.
Hmm. So these are the things. You can say pros and cons means advantages and disadvantages. What are the advantages and what are the disadvantages?
Management of account receivable and payable. Managing account payable and account receivable is essential to any business. One need to be able to track what one
O's.
a supply, a supplier, what one has sold, and what one's customer owes one. This is especially true
True.
in a large company that manages hundreds of different transactions a day. Two departments, accounts payable, what one owes, and account receivable, what one had sold, are responsible for keeping track of money coming in and money going out at one's business. Managing AP and AR can be bit of a juggling
Juggling
act.
act. That is account whatever you have sold, but you have not received the payment. So that what is to be received is account receivable, and whatever you have bought and you have not paid, So that is accounts payable. So these two things, there are so many transactions going out every day. So you have two different departments to look into this. Whatever is going out and whatever is coming in. What money has to be paid and what money has to be received.
Staying on top of these account means the difference between properly tracking one's purchase and potentially overpaying or not being paid for goods and services, which make their proper management more important than ever.
So you have to keep an account of whatever you are not overpaying or underpaying or not over receiving, under receiving. So both these things have, so that your business is running smoothly. So accounts payable is the money you owe to vendors. You have to pay at later time. And accounts receivable is the money owed to your business, something which you will be receiving. They have bought the goods, but they have not paid you. So that is accounts receivable.
Tip for managing account payable and account receivable. One things One thing owners and managers don't like about transaction is when they lack a long time of close. Receivable department often establish credit term which may vary according to the
Clientele.
clientele they serve. Regular customer with good credit railing receive a greater flexibility period for payment, whereas first time customer not may not be given as much leeway
Leeway.
when it come to payment terms. Most companies stable terms at 15 to 30 days. Accordingly, payable departments should pay supplier as soon as the shipped item arrive in good condition. If you do so, you might even be able to take advantage of discount offered by supplier for early payment.
So, like for example, receivable, suppose you have a good relationship with your client and you have seen he is credit worthy, like he or she pays it in time, but once in a while, if they are not able to do it, you can give them leeway. But someone who is new, you don't know the credit worthiness of that person, then you have to be strict. For the first time, you have to be strict. Otherwise, you don't know whether they'll be paying you your drive or delaying the payment. And similarly, when you are paying to your suppliers, you have to be strict with the terms and condition. And also, if you pay it earlier, you can get discount on your payable. Yes, continue.
Certain transaction cycle. A certain transaction cycle for item bought and sold will save your company money on labor dedicated to making those exchanges. Longer cycle may be systematic symptomatic of workflow. Bottleneck or low cash flow as occur when a company opts to wait to be paid for a sale before repaying a supplier. To avoid that situation, establish timeline or receivable and payable better. Still, establish shorter receivable timelines so that you can quickly deal with your account payable. Get department into the habit of issuing invoices, purchase order, and other documentation on designated days of the week or month to create and routine you can work
So you have to be very strict, because you are waiting for the customer to pay. If he or she does not pay you in time, you will not be able to pay the supplier. So in both the cases, you have to have a very strict routine, and you should follow it very strictly, so that your whole business operates smoothly. So shorter cycle is much better.
Faster, more communication. Think to account receivable as your left hand and account payable as your right hand. Now, Zagal, bit tough is not it. Companies might struggle to stay on top of both departments, especially when dealing with larger volume of transactions. To make this easier, each department should consult the other on purchase and sales affecting the company. If there is huge consumer demand, receivables can single payment to order more items. It if times are tight, payables may want to curb procurement until there greater stability.
So there has to be a very good communication between these two departments, because after all, whatever you are receiving, then only you are paying. So if there is if there is a huge, like forecasting plays a very great role over here. If you know that there is a lot of demand, so you have to get the raw material for preparing that. So if the supplier should be able to, you can, and you should also see that once you have made the received the money for your goods, you are paying the suppliers in time. So there has to be a balance between these two. Yes,
Stay
continue.
on top of aging account. One should be recording transaction immediately and issuing statement regularly, but it is not. It's also prudent to look at old account to make sure that everything is settled up. If any outstanding receivable are on the books, take action immediately and suspend any further business with that particular client until their account is balanced. Set up the policy indicating the maximum period it is to take a clear a customer account. Similarly, for payable, if supplier are missing payment within a designated time period, phone it up as soon as possible and establish the timeline or when payable should be cleared.
So again, it is the same thing, that both the sides, the getting money from the customers and paying the suppliers. If customer is not paying in time, you should take strict action, and you should also pay the supplier within the specified period, so that things, the relationship with your supplier is not affected.
Use automation to track everything. Tracking account receivable and payable invoice and creation of invoice, receipt, shipping order, purchase order, financial statement, and other documentation. It is a painstaking process and one that's even more cumbersome if even a single document slip under the radar. Using account payable software to automate all those transactions in real time allow for the quick completion,
Compilation.
compilation of information needed the financial statement and can help track anomalies such as
Delinquent.
delinquent account or interruption in workflow.
So you can see it is not a very easy, it is a complex thing. So if you use a software to handle all these things, so it will be more transparent and much faster. That is what you want. So over here also, your information technology helps you in maintaining a good relationship with both your suppliers as well as your customer by running both accounts payable and receivable smoothly.
Now mostly companies are use the
Using
software,
software now,
and
it
it
is
is
the done thing.
very easier to extract
Ah,
the particular report table and receive in a single click.
hmm.
Conclusion: reverse reverse funding is a suitable supply chain financing strategy for many situations. It provides benefit to supplier, ordering parties, and financial institutions alike. Trade credit is a form of commercial financing that greatly benefit business in their operations. It is an interest-free loan for a buyer, allowing them to obtain goods with payment due to a later date at no extra charge. This allows for improved cash flow and the evidence, sorry,
Avoidance.
avoidance of traditional costs associated with financing. Managing account payable and account receivables is critical in determining and financial health of any company. Properly tracking and managing them is important, not only the assessing overall performance, but for helping managers and owners make smarter decisions that can influence an organization's future.
Future. So all these three things, reverse financing, trade credit, and managing accounts payable and receivable, all these things are for the benefit of both the suppliers as well as the buyer. So it is the duty of both the parties to see that things are moving in a much more transparent way and in a much smoother way, so that both the parties are satisfied. Because as I've already explained, that supply chain management is a relay race. In a relay race, if you want to win, all the stakeholders should be equally involved. The aim, the goal of everyone should be the same. And if it is not so, naturally you will not be able to obtain the objective which you are looking at. So this is all. These are the three things which is very important for any supply chain financing: reverse funding, trade credit, and managing accounts payable and accounts receivable. And then we'll do the foreign exchange, because now supply chain management is not concerned only with national players, or it is involves everyone. Suppose you have a business which is global, then you have suppliers also who are across the globe, all over the globe, manufacturer also all over the globe. So you have to take the foreign exchange rate, foreign exchange risk, all these things into account. I think these three things are clear to you of financing the supply chain management. Any questions?
No,
Hello?
ma'am. No, ma'am.
Okay, so we'll do the next second part. So this is the second finance for supply chain management.
Can I read?
Gaurav ji, हाँ, yes.
Gaurav,
Praveen ji.
you continue.
Okay. Foreign currency risk management. Firstly, foreign currency risk management is the process that allows firms to protect themselves from currency risk. Secondly, this allows them to take control of their own competitiveness by capturing the growth opportunities resulting from buying and selling in multiple currencies. Foreign currency risk management relies on a variety of hedging programs and combination of programs. The detail of each program vary according to the pricing dynamics, the weight of foreign exchange in the business, the location of competitors, and the situation in terms of forward points. And lastly, foreign currency risk management programs takes into account the company's source of information, IT systems, degree of cash, low visibility, and key decision makers. Their risk tolerance, their sound is not visible, ma'am.
I just 1 second.
Yeah. Their risk tolerance, their familiarity with different risk management styles, etc.
So, because now you have the the whole business is not located at one place, so you have to have a very good foreign risk management. So forex is how to convert currency, how currency fluctuates, types of foreign risk, and hedging methods.
Yes, ma'am. How to exchange currency? Firstly, currency can be converted using an online currency exchange, or it can be performed manually. To use either method, you must first look up the exchange rate using an online exchange rate calculator or by contacting your bank. The rates charged by your bank may differ from those you see online because banks earn small profits on exchange, whereas online rates are the same as those quoted between banks.
So you have to see what is the rate. For example, today what is the rate of how much dollar and rupee? It is more than 80, na? So you have to be very sure what is the exchange rate. This you can do either by checking from your bank or online. So they might slightly differ because the bank uh, makes profit through this. So it can be slightly higher.
Currency fluctuates. Currency fluctuations are simply the ongoing charges between the relative changes between the relative value of the currency issued by one country when compared to a different currency. These changes are something that occur every day and affect the relative rate of exchange between various currencies on a continual basis. It is these fluctuations that
Yes.
These
What happened?
look too closely in order to generate a profit from their investment.
So naturally, uh, these days, like if you want to import something, the dollar has compared um, to rupee has, so it will be much more costlier than what it was, some say, a few years back. So you have to take all these things into account when you are doing the pricing for your goods.
How currency fluctuates. There are a number of factors that can lead to such fluctuations. Firstly, is current state of the economy associated with a given country. If the general perception is that a country is going through a phase where severe conditions will exist for an extended period of time, the currency of that country is likely to lose value in comparison to other countries. When it uh, when it appears that the currency of a country will only remain depressed for a limited amount of time, and an investor can afford to hold on to the currency in the interim. He or she may realize the substantial profit,
Substantial. Hmm.
substantial profit when the country recovers and the relative value of the currency rises.
So you,
Political issues,
hmm.
yeah,
uh, it can
yeah,
be due to the current economy. It can be due to political issues. Yes, read it.
yeah, political issues may also affect the nature of currency changes in that lack of confidence in a new government may temporarily diminish the value of the nation's currency on the open market. Once confidence is restored, the currency will tend to rise and investors can consider it to be a worthwhile investment once again. When currency fluctuations are due to political factors, the impact is often short term, although it can be long term as well.
So it can be due to economical reason. It can be due to political reasons.
Now, foreign exchange risk. Foreign exchange risk refers to the risk of an unfavorable change in the settlement value for a transaction entered in a currency other than the base currency, domestic currency. And the risk arises from the movement in the base currency rates or the dominated currency rates and its exchange rate.
Just one second.
Yeah. Just in the case, the risk arises from the movement in the base currency rates or the dominated currency rates, and it's also called exchange rate risk or FX risk or currency risk.
So naturally, if our money is further devaluated, so the things which are importing will become costlier. So you have to take that into account. So what is the risk involved before taking any decision?
Some types of foreign exchange risk. Foreign exchange risk can be classified into the following three types of risk. Types are transaction risk,
Translation risk and
translation risk,
economic risk.
and economic risk. Uh,
One second. You have transaction risk, translation risk, and economic risk. Transaction risk,
where the business transactions are entered in a currency other than the home currency of the organization. Then there is a risk of change in the currency rates in the adverse direction from the date of entering the transaction to the date of settlement. This type of foreign exchange risk is known as transaction risk. The risk arises on the actual and probable import and export transaction.
so naturally, if today we suppose the money is 1:80, but today when you are entering, but when the settlement is done, it becomes 85. So naturally, there is a risk of making the things becoming costlier. So that is the transaction risk.
एक्चुअली इस तरीके की प्रॉब्लम होती है मैम, क्योंकि हम लोग नेचुरल रेगुलरली बेसिस पे जो करते हैं वो टीटी बना के देते हैं एक बैंक के लिए, और वो उस दिन का फीस रहता है कि उस दिन मतलब जिस दिन दिया है हमने, तो वो आज तक कभी ऐसा प्रॉब्लम आया नहीं।
मगर हो सकता है ना, इतना जल्दी तो नहीं होता, तो वो कुछ ऐसे पीरियड लेते कि जब वो नहीं हो, but the probability is there. The translation risk.
Translation risk. Where a business organization has a foreign subsidiary whose reporting currency is other than the reporting currency of the parent company. Then, for consolidation purposes, subsidiary balance sheet items are converted into the parent company's reporting currency based on the prevailing accounting standards. The risk of movement in the consolidated financial position and earnings resulting from exchange rates is termed as transactional risk. The results in turn impact the stock prices. It is also termed as accounting exposure.
So when there is the difference, the parent company might be some other country, the subsidiary might be in some other country, and if they are using two different currencies, the risk involved over there, this is the transactional risk. Then economic risk.
Economic risk. It is the risk of change in the market forecast of the company's business and future cash flows resulting from a change in the exchange rate. This in turn impacts the market value of the firm. Example, a monopoly product of the company starts facing competition when the lower exchange rate renders the imported product cheaper. This type of foreign exchange risk is also termed as forecast risk.
The economic risk is if the risk of change in the market, something has been forecasted and future cash flow is different. In that case, what is the risk involved?
Blockchain technology.
This is also very much used in supply chain management, blockchain technology.
What is a blockchain? Blockchain is a distributed ledger technology that enables digital assets to be transacted and traded in real time. The recorded keep is permanent and irreversible.
So here it is a distributed ledger. It is not at only one place. It is distributed through many stakeholders. In fact, all the stakeholders.
Business blockchain. It has two main applications. Uh, One familiar use of blockchain technology involves trading and managing cryptocurrencies like Bitcoin. The other main use of blockchain is for managing transactions related to trade and commerce, including finance processes like payables, receivables, and compliance checks. We think of these as business blockchain.
So we are more interested in the other, where it is being used for trading things or in the supply chain.
What is this Bitcoin, ma'am?
Actually,
So
even I don't know
digital
it
currency,
very.
yeah,
It is a virtual currency. It is not a
yeah.
real currency. It is a virtual currency. And
Okay.
how exactly because there's so much controversy regarding this.
Yeah. Actually, how they are assuming the cost of that, ma'am?
I'm not a person from finance. I don't know,
Okay.
to tell you the truth.
मैम एक्चुअली ये ब्लॉकचेन जो है वो इस तरीके का ट्रांजेक्शन है कि हमने किसी पे जैसे बिटकॉइन या जैसे आपने बताया ये बिटकॉइन में अगर हम इन्वेस्ट कर रहे हैं तो उस तरीके के ट्रांजेक्शन को हम ब्लॉकचेन बोलते हैं।
हाँ, मिलते हैं, मैंने पढ़ा है, बट मुझे इतना उसका बहुत डीप नॉलेज नहीं है।
नहीं नहीं ब्लॉकचेन एक्चुअली जानना चाह रहा था मैं ये पर्टिकुलर ये क्या चीज है।
ब्लॉकचेन इज ए डिस्ट्रीब्यूटेड लेजर, जो अभी हम आ रहे हैं देखना।
ओके
हाउ ब्लॉकचेन वर्क्स। See, Alice wants to send money to Ben. The first block, it is a chain, as the name says. The first block is created online and represents the transaction. This block is broadcast to every party in the network. ये distributed हो गया ना। पहले तो वो block is created जो transaction को कर रहा, फिर it is distributed throughout the party, जो भी उसमें involved है. Those in the network approve the transaction and validate it. That is why it is more reliable, क्योंकि एक आदमी के हाथ में नहीं है, बहुतों के हाथ में, तो everybody has to validate it कि हाँ ठीक है. The block is, so everybody has to validate it. The block is then added to the chain, which provides a permanent, non-repudiable and transparent record of the transaction. जब वो सब लोग वैलिडेट कर देंगे तब वो ऐड जाता है उस चेन में. So then Ben receives the money from Alice. ऐसा नहीं है कि सीधे जैसे डिजिटल हम लोग ट्रांसफॉर्मेशन कर देते, only a financial institution is there and it is being transmitted from Alice to Ben. It is through blockchain. So it has, the whole chain is being distributed to all the stakeholders and everybody has to validate, and this is a permanent record. It cannot be erased or anything. So this is a more transparent and better way of doing business.
And so the block which is created by Alice now. So that is through any financial institution, or that's how it is handled?
No, it is through a financial institution. Okay. How can Alice created the
Okay, through a financial institution.
institution?
Okay.
So now you must have heard this. Future trends are combination of blockchain, cloud computing, and big data. The cloud, so we have seen what is blockchain, now what is cloud computing. Cloud computing is one of the ways in which computing has now become something that we can do anytime and anywhere. Cloud storage provides space in which data or information is stored on remote databases instead of storing information in computers' hard drive. Like all this information which is when we are sending it through email, that is also being stored in a remote database. The internet provides a connection between computers and database. Big data refers to a large set of data which cannot be handled using typical computing technologies. So we are now using all these three together. So here is the supplier. Here's the manufacturer, owned finished good, where it goes to warehouse, then it goes to distributors, and finally to the customer. And all this data is stored in a cloud. This is how finance is moving from one to the other. Did this now present scenario?
Yes, ma'am.
Kindly increase the size and font color is black. So I
Oh,
think
you cannot. I just wait 1 second. Now you can read it.
Yeah, yes, ma'am. Present scenario. Now companies can make all of their data available through simple apps. Every employee, no matter where they are located, can set up an instant office with a simple and secure wireless connection. New applications are instantly deployed globally to all employees when they are ready. All employees are looking at the same data using the same application software and reacting to the same real-time information. So companies have enterprise resource planning ERP systems which are running on the cloud. An ERP system is a customer system, computer
It is a
system
computer system.
that integrates application programs in accounting, sales, manufacturing, and the other functions of in a firm. The integration is accomplished through a database shared by all the application programs. And in addition to the transparency provided by the blockchain with ERP systems running on the cloud, transactions are processed in real time, meaning that as soon as a transaction is entered, the effect is known by all users of the system. So the combining effect of blockchain, cloud computing, and big data in supply chain management comes into play.
So now it is possible because of this integration of all the modules in one through and keeping all the data in a cloud at one place so that everybody anywhere on the globe can see it and manage, see how the transaction is moving. Like the way you track, suppose you have ordered something, you can track your delivery, because now it is not being the database is not being stored at one place. and one's computer. It is in the cloud, and everybody through internet has an access to that database. So these three things are making supply chain management much more easier. So you can say ki information technology, you can say this is also a very important role which information technology keeps your supply chain transparent, efficient, both transparent and efficient, so that all the players, all the stakeholders in the supply chain can see what is happening anywhere, right from the supplier to the end customer. Everything is should be transparent. Everybody should know what the other is doing, how things are moving. Okay, any questions? So you have seen in finance, especially apart from other financial transactions, it is not that any supply chain is above that, but apart from that, reverse factoring, trade credit, blockchain, cloud computing, all the big data,
ERP.
all yes, ERP. These are playing a very major role in keeping your supply chain transparent and accountable.
These are new techniques.
Yes, these are the new techniques.
Okay.
Because see, supply chain management means managing it, the whole operation, right from the time you are getting the raw material to the time you are sending it as a finished good to the customer. Also, and even back. If suppose the customer does not like it or there's some problem, it can be sent it, he or she can send it back to the manufacturer or the place from where he or she has bought it. So naturally, this requires a lot of players. And if there is not good communication among these players, the whole operation will not work smoothly. Especially in competitive era, there's so many supply chains and there's such a hard competition to live, to survive in this competitive era. You need these technologies. Gradually, things are changing everywhere. Like the technology which we were not using when we were young, but now we are forced to learn them and start using them. So things
Yes.
are, even in organization, that is happening, isn't it?
Yes, ma'am. We have to upgrade ourselves, ma'am.
You have to keep on upgrading.
Yeah,
Life
keep on upgrading.
long, you have to keep on learning. Things are moving very fast these days.
Yes, ma'am.
Any questions?
Ma'am,
AI के बारे में थोड़ा सा जानना था, कई बार लोगों से पूछा है लेकिन
Artificial intelligence.
Yes.
अरे भाई, I'm not a person to
Okay.
I
मैंने कहा
have
कुछ
also heard about it. I have read about
for
it.
sharing.
See, I have read about it, but I cannot say that I have mastered it.
No. I did not say that. But have some data. I have a knowledge. You can share.
Actually, जैसे हमारा ब्रेन वर्क करता है ना, उसको हम आर्टिफिशियली रिप्लेस कर सकते हैं. जैसे दो चीज होता है कि हमारा ब्रेन में न्यूरॉन है, हम किसी चीज को देखते हैं तब उसको रिकॉग्नाइज करते हैं, वो इंफॉर्मेशन हमारे ब्रेन में स्टोर्ड रहता है और हम एक एल्गोरिथम ये होगा तो ये होगा ऐसे करते हैं कि नहीं, तब ये होगा, एक इन्फ्रेंस निकालते हैं. तो ये चीज it is being done automatically. We are trying that. अभी it has gone up. अभी तो काफी चीज होने लगा है and that is why इतना ज्यादा लिंकेज हो गया आजकल. जैसे आप एक बैंक अकाउंट खोलने जाएंगे तो उसका they'll ask you for a PAN कार्ड नंबर, है ना, तो वो उससे लिंक हो गया आपका. मान लीजिए आप 2-3 अकाउंट्स है आपके, बट सब ड्यू टू पैन नंबर तो वही रहेगा सब में, तो सब में लिंकेज हो जाएगा कि नहीं। तो जो आर्टिफिशियल इंटेलिजेंस है, जो मशीन लैंग्वेज यूज करते, तो दे कैन चेक, उससे वो लिंक कर लेंगे, पता लगा लेंगे कि आप किसी चीज को छिपाना बहुत मुश्किल हो गया है अब। तुरंत पता लगाएंगे कि कहाँ कहाँ आपके पैसे हैं, आपने कहाँ टैक्स भरा है, कहाँ नहीं भरा है, ऑल दिस इंफॉर्मेशन। जैसे आप मान लीजिए आज when you are searching something, what will happen next time, you'll see those only things will start coming on your screen. जैसे
Yes, ma'am.
आप YouTube देख रहे हो, मान लीजिए आप किसी रेसिपी को सर्च कर रहे हैं, देखिएगा नेक्स्ट टाइम ऑटोमेटिकली वो सवाल, क्योंकि कुकी लगा देते हैं, तो वो जो भी इंफॉर्मेशन जनरेट हो रहा है वो एक जगह कैप्चर हो जा रहा है, और फिर उसी इंफॉर्मेशन से वो आगे डिसीजन ले रहे हैं, क्योंकि देन दे नो, ये लगता है कि आर्टिफिशियल कोई देख रहा है आपका, बट इट इज बीइंग
Yes.
डन थ्रू अ सॉफ्टवेयर। तो दैट
Ma'am,
इज व्हाट
ma'am, yesterday only I typed in Chat GPT that can you teach me the data science? Yeah. So it again replied me, yes, I can teach you if you are interested. So I became very curious, ma'am. So I started and asked some questions regarding it. So it's very nicely it started means showing some means programming and all, like how to do coding and all. So so that is also very beneficial, man. Sometimes some basic things it's started to showing regarding that. I
आजकल
think
तो
artificial yeah.
हाँ,
It is
they
very
are using
beneficial.
artificial intelligence for that.
Yeah. Yes, ma'am.
Those sort of data जो आपका क्या इंटरेस्ट है, आप क्या जानना चाहते हैं, उसको वो कैप्चर करता है, पहले एनालाइज करता है, एंड देन दे शो यू दोज थिंग्स ओनली, जो आप जानना चाहते हैं वो आपको दिखाता है।
Yes, ma'am. There's some limited way.
हाँ, लिमिटेड थोड़ा तो अभी, आफ्टर ऑल इट इज बीइंग मेड बाय सम मैन, मतलब कुछ लोग जो उसके एक्सपर्ट है वो बना रहे हैं, तो थोड़ा तो लिमिटेशन होगा ना, पर धीरे धीरे इट हैज इम्प्रूव्ड अ लॉट, और पता नहीं फ्यूचर में क्या है। अभी आज से शायद हमारे पहले वाले जनरेशन को बोले कि अभी जैसे कार्ड ही खेलना है, जैसे सॉलिटेयर या स्पाइडर आप खेल रहे हो, वो कैसे समझ लेता है कि एक पे आपको डिफरेंट कलर्स के कार्ड लगाने हैं, किसी में सिमिलर कलर के, वो तो पहचान देता है। तो these things have been developed। तो ये क्या है?
आर्टिफिशियल इंटेलिजेंस।
आर्टिफिशियल इंटेलिजेंस।
अगर हम इसको सिमिलर एक सिंपल लैंग्वेज में अगर ये कहें मैम, कि आप जो भी ऑनलाइन मतलब कुछ भी इंटरनेट पे सर्च कर रहे हैं, या क्योंकि आप जो सोच रहे हैं वही सर्च कर रहे हैं, मतलब
हाँ, वही
आपका इंटरेस्ट क्या है, आपको क्या पसंद है, क्या नहीं पसंद है, वो डाटा बैक एंड पे कहीं ना कहीं कैप्चर किया जा रहा है।
हाँ, कैप्चर किया जा रहा है, और
पर्टिकुलर आपके डिवाइस के एड्रेस से वो लिंक किया जा रहा है,
लिंक किया जा रहा है।
इस डिवाइस का जो एड्रेस है वो पर्टिकुलर ये चीजें को देखता है, ये चीजों को सर्च करता है, तो इसका इंटरेस्ट इस पर्टिकुलर थिंग्स में है।
हाँ हाँ,
तो वो चीजें ही आपको फिर वो आगे जब भी आप कुछ भी सर्च करते हैं या किसी प्लेटफॉर्म पे जाते हैं, तो उस रिलेटेड वो चीजें आपको ऑटोमेटिकली आपको प्रेजेंट की जाती है।
वो आपका ये इलेक्ट्रॉनिक फुटप्रिंट जैसे कहते हैं इसको, माने इलेक्ट्रॉनिक, जैसे आप सैंड पे चले तो आपका फुटप्रिंट बन गया, चाहे कहीं भी, तो आपको पकड़ा जा सकता है। उसी तरह जब हम लोग डेटा सर्च करते हैं तो हमारा इलेक्ट्रॉनिक फुटप्रिंट बन जाता है। अब देखिए कि यदि मान लीजिए आप मोबाइल एक से ज्यादा यूज कर रहे हैं, लैपटॉप यूज कर रहे हैं, मगर वो सारा कुछ लिंक्ड हो जाता है, सारा कुछ लिंक्ड हो जाता है, क्योंकि आपका नाम, डेट ऑफ बर्थ, कुछ तो एक होगा ना कॉमन, वो
हाँ,
कॉमन
मैं
सब
वही कह
बच्चों
रहा
के।
हूँ कि कुछ ऐसा
हाँ,
मतलब एक लिंकेज लिया जाता है, चाहे मेल
ले
आईडी,
लिया
चाहे
जाता है,
नाम
क्योंकि आप
से, चाहे
देखिएगा
किसी
वही
चीज
वही
से।
चीज आपका लैपटॉप में भी आ रहा है, वही आपके मोबाइल्स में भी एक से ज्यादा है, तो वही वही चीजें आ रही हैं।
जी
इवन
इसका
डेटा
मतलब
भी
वो
सेल
सब
हो रहा
चीज।
है मैम।
हाँ।
डेटा भी सेल हो रहा है, कुछ मिड पार्टी सेल
हाँ।
भी कर रहे हैं डेटा
हम्म।
अज्यूम
और
करके।
जो भी चीज आप मान लीजिए कि कुछ खरीदना चाहते हैं, एक बार सर्च कीजिए, देखिए कितना आ जाएगा आपके पास हमेशा वही वही आएगा।
मतलब जो
जैसे।
आज की अगर हम बात करें कि अगर मुझे कुछ नया बिजनेस स्टार्ट करना है, एक
हम्म।
एग्जांपल,
हम्म।
तो मैं एक डेटा जो भी किस तरीके के ऑर्गेनाइजेशंस हैं जो डेटा कलेक्ट करते हैं
हम्म।
या जिनके पास इस तरीके के एआई की फैसिलिटी है,
हम्म।
तो वो पर्टिकुलर बिजनेसमैन वहां से डेटा ले सकता है कि क्या आज की डेट में ट्रेंड कर रहा है ज्यादा, या लोग
है
क्या
ही,
सोच रहे हैं आज
तभी
की।
तो कह रहे हैं ना कि आजकल डेटा ही ऑयल हो गया है। जैसे किसी
जी।
एक समय था कि ऑयल, मैंने जितने मिडिल ईस्ट कंट्री हैं ऑयल की
यस,
वजह से पैसा कमाए। आज
यस,
जिसके पास डेटा है
वो
वही
पैसा
पैसा
कमा
कमा
रहा
रहा है, वही
है। जी,
पैसा
जी।
कमा रहा है। तो दैट
यस
इज
मैम।
द लेटेस्ट थिंग टू अर्न मनी, बिकॉज इफ यू हैव द डेटा यू कैन टेक द डिसीजन अकॉर्डिंगली। डेटा को
तो
आप
यहीं
प्रोसेस
से
कीजिए आपको।
आपका आपका ये भी आ जाता है कि आप क्या बाइंग पावर आती है,
हाँ, क्या
क्या
बाइंग
आप पर
पावर है। हम्म।
कितने परसेंट लोग क्या किस तरीके का बाइंग पावर है उसकी,
हम्म।
मतलब कितने क्या रेशो है कि
हम्म।
इतने लोग इतने मंथली ये एवरेज में परचेज करते हैं, या इस तरीके से भी डेटा मतलब एनालिसिस होते रहते होंगे।
डेटा एनालिसिस तो आजकल इसीलिए इट्स a growing branch.
Ma'am, what about our exam, ma'am?
हाँ, हाँ, एग्जाम।
Yeah.
सी, आई बी सेंडिंग यू, मैं व्हाट्सएप पर ही दे दूंगी 4 टॉपिक्स on which you have
Okay.
to give a presentation, and you'll be then later on you'll be asked questions from that presentation, and SCM in general, operations and SCM in general. It will
Okay.
be held on not this Sunday, next Sunday. That is, I
Okay,
think
ma'am.
it is uh, 20th, na? Next Sunday will
Okay.
be 20th,
Okay, ma'am.
20.
Yeah.
11 to वही 1-1.5 घंटा, 11 to
Okay, ma'am.
say you can take it 11 to 1.
Okay,
One,
ma'am.
apart from Mr. Yagnik, myself, and there's one Professor S.K. Sharma. He's a retired professor of mechanical engineering from IIT BHU. He'll be
Okay, ma'am.
there as an expert.
Okay, ma'am.
Okay.
So it will be, ma'am, we will be asked questions regarding that PPT. With
हाँ,
the
पीपीटी,
presentation.
और हो
Yeah.
सकता है, आई डोंट नो, एक्सपर्ट तो कुछ भी पूछ सकते हैं ना।
Yes, ma'am. Okay, ma'am.
वो ऐसे ज्यादातर तो आपके पीपीटी से, आई विल बी सेंडिंग यू द टॉपिक्स टुमारो।
Okay, ma'am.
ओके।
Okay.
ओके, गुड नाइट।
Okay, ma'am. Good night.
गुड नाइट।